45 years of experience to help you manage your portfolios and protect your wealth. Remember to subscribe, like, and share these videos. In tonight's video, we're going to discuss the ongoing silence around the tariffs and the so-called deals. We're also going to go through the rest of the week, which we're getting into the crux of all of the economic reports that are coming out. So let's get into tonight's video. Well, welcome everyone. It is Tuesday night. Today went pretty much as I expected, just with some choppy action. Got a little bit of a rally late in the session. That seems to be the ongoing situation from that standpoint. But the things I want to talk about tonight is going to be the ongoing silence around the administration. I watched the press conference today with Scott Bessent and in the big conference room with the press, and I'm just shocked here, folks. I'm becoming a bit of a broken record, but I look at what these guys are doing. They're running around talking, still the jawboning going on, and I'm a little frustrated. I think almost everyone was. All of the folks in the room kept asking, hey, when are we getting a deal? Where, that I've been going on for days about this. And Bessent said something and I went, oh yeah, that's what's going on. So Trump's negotiating style is to keep lots of chaos around and uncertainty. He made the comment, goes, you can't negotiate if there's no uncertainty. And so they're creating this situation. And I've been saying for a while, and I mentioned in last night's video, that what we're seeing is the talking heads around the White House are, asking questions like, should we do a batch and put everything out there at once? Or should we do individual announcements when we get deals? And, at this point, no one cares. But we switched, I talked about a couple nights ago that the target was, Japan was very close. Do you remember hearing that? Well, now it's Japan's close, but India's closer. So that's an interesting switch. So they're changing the focal points of all this stuff that's going on, and it's getting, in my opinion, anyway, it's getting very frustrating. Meanwhile, the markets seem to even like just hearing Scott Bessent talk. The rally that we saw today came somewhat around that press conference that they had. So that's interesting as well. But I continue to listen to the responses. And initially, I was real impressed with Scott Bessent. I thought, okay, this guy's good, 35-year-old veteran market guy, worked with Soros, Stanley Druckenmiller, Miller, all of these people, right? He knows what he's doing. But the communications, I've been very disappointed in all of this. So, but like I said, markets seem to be okay. We continue to grind up. You'll see as I go through the analysis tonight, there's still more positive tone flowing out of the market. I'm still waiting for the database to finish right now. So we'll get the results of that here in just a few minutes. But the result of everything is nothing. So we still don't know any more than we did yesterday or the day before or 3 weeks ago. And the questions are coming, are you going to pause the 90-day pause and extend it, all of that stuff out. So, but one of the things that looks like all of a sudden everything, Japan's on the table, and we can call India kind of that Eastern type viewpoint from the standpoint of deals. So you're looking at, the Asian countries and then India. And he made a comment that India is actually easier because they have massive tariffs all over everything they do. They live around tariffs. So they're going to be a lot easier to negotiate with. What that looks like, I don't know. So the other night I talked about that the Japanese was going to be the model, like the cookie cutter. Like if we can get a deal with them, then we just use that and modify a couple little things. And so you have, you have like a cookie cutter and you start making cookies. I have no idea what these people are doing anymore. And like I said, I think the markets have stopped following all of the day-to-day stuff, which is a good thing for what we're looking at. So we got, we're getting earnings to come out mixed still. I thought it was interesting that Amazon is going to put a little red number next to every product on their system to show what the effects of tariffs are. I thought that was interesting. Seems a little aggressive, especially with Bezos hanging out, at Mar-a-Lago and going into the into the White House. So we'll see how all this plays out. But the bottom line is, the markets always need something to focus on. I always say the market can't walk and chew gum at the same time, and there's not a lot to focus. So we're coming into the crux of this week, which is going to be starting tomorrow, ADP, and then Thursday we'll get the claims, continuing claims, and then ultimately we'll get the employment situation. So we're going to start focusing more on the employment situation than anything else. So we'll kind of look at the markets, at least from that angle. It seems to be trying to tie any kind of macro environment in, and what might be driving sentiment right now is pretty dry as it would go. So tonight we may be able to get done fairly quick here. I don't see that at the moment there's a lot to talk about. The patterns that I'll discuss, we're still seeing that tightening and normalization happening on some of the charts. There's just still a lot of work to go. It'd be interesting to see if we get more traction on the database. And so let's go ahead and let me take a look before I venture off in here. Let's just see if I've got everything run. Okay, one part's done. Yeah, it looks like we're all done here. Okay, so let's go ahead and go into the database. Things are definitely slowing down. So let's take a look here. So on the database, we are at 44.64. The next metric that we're going to watch here is going to be 48 to 52%, but we're definitely getting a little bit more traction. I'm just going to round these numbers off. We're looking at about 450 buy signals, new entries, and about 107 exits. So we still have this positive bullish ratio coming into the database, even though the numbers are starting to get smaller. We're up to 6,559 symbols long, 44%. And the sectors, let's see if there's any expansion in the sectors here. Yeah, so we have two new buys on the sectors. So conglomerates and energy are coming into play. So that's interesting from a sector standpoint. We're definitely getting some further rotation. So all of a sudden we're looking at 8 of the 12 sectors that we have in our database is long. And so we are seeing some of the indices start to come in. And these are custom indexes that were built into WaveTech. So yeah, we're still getting positive coming along here. I've been talking about potentially the markets moving back up to the underside of the 200-day moving average. And while that's good if you're long, you want to pay attention to possible rejections from that level. So anyway, let's go ahead and see if we can roll through tonight's video fairly quick and see what we can get done here. So we'll go to the S&P futures, and what we're seeing here is we're seeing the algos are still trying to improve as we come into all the way focused into next week, where there's going to be a positive flow. We've been able to stay above the 10-period moving average. We're now in trend mode on the 10-period moving average, so that's somewhat positive. I believe this is I always get these wrong. So this is the fact sheet for today. So it's got 70% neutral with an upside bias. That is what I'm talking about here, and I'm going to go back to the chart here in a minute. But we're looking at the trend is up on a short-term basis, but it's somewhat mixed. We've got a couple divergences that are being detected, and we're looking at the probability of 5601 on the upside, and then current we're around 5573, and then we've got S1 is 5525, and if we go down just a little bit here, highest probability trade target that you want to buy at 5565, target 5602, stop 5542. That's kind of a big there, but this is just coming out of the quant stuff, just trying to look at that. So going back to the chart, you can see the ppms are all flowing sideways, tells us we're in this positive upslope. But if we look at the last 4 or 5 days, we've managed to inch out of new highs, but we're just seeing that market grid start to collapse around here. And typically, if it gets really narrow, that precedes a downward reaction out of that narrowing volatility. So we'll see. You can see if I can point out a couple areas so you can see what I'm talking about here. So what we're looking at is right here. I just drew this red circle. It narrows down, and then we get a move down. This was another narrowing here, and now we're starting to see it could narrow a bit further. We have a rising 10 pattern in coming into here, and we still have positive ppms until Monday or so. So it looks like, we've got a fair amount of news coming out. We've got actually GDP news coming up, update as well. But we got PCI tomorrow. We got a bunch of stuff coming. ADP, which I'm not sure anyone cares about, but the ADP number might be more accurate than the BLS number coming from the Labor Department. So on Friday, because that's where the books have been being cooked from that standpoint. But these circles I've drawn here are areas. Here's basically another one right above me here. Let's make this a little fatter so you can make sure you're seeing them. But here's this one. We've got these big areas where contraction, and I've been talking to you over the last several days about when you get the big bubble, like when you get this bubble here, and then you have to get a normalization. You get a blow up in volatility, normalization, then you can make trend decision moves or directional moves. And then, so we're coming into probably, if I just take all this out here, I would suspect that if we go forward, we're going to be able to draw this, we're going to stay within this circle, and we may go and challenge the 200, but I think we get a reaction. A lot of times you'll come up, if you look here, we were below it. We reacted off the 10 here. So we came up to the 200, and then we reacted, went to new lows. We also had these Fibonacci targets, and the Fib targets are still maintaining the downward motion, meaning that there's still downward targets that are valid here. So we easily could come out of this little pattern here, maybe set up. And I went through a lot last night talking about an ABCX type pattern. So we get ABC up, and then this would be an X wave. We come back down in here, and then maybe get another series, get a double 3, and then possibly over here somewhere is where we're going to be able to make some kind of directional change. If we look at the forecast, which makes sense as well, is we're just seeing all the indicators just flatten out on the forecast. So we're going to need more information as we come into the 1st of May. We'll be able to do it on I'll make a note to myself that on Sunday night's broadcast, we usually go at the first of every month. Since this was the first month of the new quarter, we dig in a little bit and look at the longer term. We'll bring up the quarterly charts and a monthly and kind of do a step back, go up to 30, 60,000 feet and look at the market to see what's set up. And I still think, as I've been promoting for a while, is that we're locked in this range. We're not going to just moonshot into new highs, but with Trump as president, maybe they come up with some magical deal and they announce a deal with 7 countries all at once, and and it just blows the market up. And I'm sure it feels very manipulative, and it is, and I think they want to shock and awe the markets from that standpoint. And that was the other thing that I thought was interesting that Bassett said today, is that the retail, and this is the way they are promoting things. It's kind of gross in some ways, but the retail investors trust them because 80% of all the retail, I don't know where they get these numbers, didn't sell the market. Only the institutional guys panicked. And, pretty much running a channel that has a lot of retail customers around it and institutional, I think everybody was feeling it, right? So I'm not sure, but it's just this rhetoric, and that's the frustrating part. It's like back to Jerry Maguire, show me the money and let's move on. But anyway, this pattern that I have up here, this is probably going to look something like this. Not going to be symmetrical like I've drawn it, but we're going to have some volatility blow up again. There's going to be some news, maybe what I'm talking about, maybe it shoots up and then everybody goes, oh, wait a minute, it's not that good a deal. And then we get volatility again. But it looks like we're stuck at least for maybe coming into summer months and maybe into July, where we get into the dog days of summer. Maybe it'll quiet down, but we've got plenty of volatility here. So I just want to keep emphasizing that this is important, because you can get ahead of yourself a little bit here. And there's still, like I was talking about last night, there's still a lot of argument. Are you sure that was the low that we had? I still think there's a possibility of another leg down. What will convince me otherwise is if we get the database to get up over 42% on the intermediates, at 20% right now. That's a big number to get back up where we have 6,000 or 7,000 symbols long. That's going to be a big number. So I suspect that we're going to chop around here. We'll see what kind of activity we get on Friday's run, and we'll have a good look as we come into next week. But patience is going to be really key. And I mentioned last night that the FOMO people that have FOMO that somehow feel like they missed a lifetime opportunity. If this was 2020, and we very aggressively, everything turned around very aggressively there for obvious reasons. They were just pouring money on the fire, right? So that was a much different time. No one's pouring money out there. The Fed's not going to do anything, and they're going to stay just like they are. Like I said, the good and bad news is Trump and Powell hate each other, so neither one of them are going to help each other. I mean, Trump always wants interest rates low because he's a real estate guy, right? That's how that works. So let's move on. Let's go to NASDAQ, see if we can get, like I said, I think we can get through tonight fairly quick. Maybe there'll be some time to look at some other markets I don't normally look at. We'll see how it all rolls out. There was something, boy, I hate this. I had loaded something up that I wanted to talk about, and I'm just going to, before we go to NASDAQ, I think it's still relevant. I hate mixing it in here. But that was something else that Bassett said today. He said that if the Chinese don't back off on their tariffs, that they're going to have 10 million people unemployed. And if they back off a little bit, they're still going to have 5 million. So I did some research here. Total labor force in China right now, 734 million. if 10 million jobs were lost, it would be a 1.34 increase in unemployment. Right now it's at 5.3. It would push it up to 6.5 plus. And you know, is it a big deal? Yeah, they got a lot of bodies over there. 10 million's, of 740 million is still a lot of jobs. And there's other elements that come into play in China. But I just wanted to see, this is always the case, and this goes back to the rhetoric and the noise that the White House is trying to create right now. Is like, let's throw a number, they're going to lose 10 million jobs. We lost 10 million jobs in the U.S. That would be unbelievable number, right? And so when you have 1.2 billion people and you get 7.75 billion working, it's still a big number. But it's when you start to look at what the real effects are, would there be effects? Absolutely. But I think it's kind of fear mongering, and they're playing the game of the words that they're throwing out there, right? So, little segue on that. And this is what the employment numbers look. This is the China employment here, and this is probably a better reflection. So it's been holding solid up where it's at here around the 5.5, 5.3%. So from, like I said, it seems to be all about kind of fear mongering and doing all that. Okay, back on ground here. So we come here and let's go to the NASDAQ. Same pattern. We're seeing the algos trying to forecast a little more strength. So like I said, we could get all the way up to the 200, and then, we're looking at, an interesting dynamic here. And it's been a while since we've traded under the 200-day moving average. Look, I'm going back here. This is 2023 was the last time that we did that. Let me so I don't know if there's any comparables here at all, but this going back to 2023 was the last time we traded under it. Here's a good example where we traded up to it and we made a lower. Let me see if I can possibly zoom in on this pattern I'm looking at here. Yeah, let me draw on this. Hang on. I'm not sure if this is going to work when I do this, but we'll find out. So the area I'm talking about is right here. So we get this action. This was the initial move down. This was the initial move down right here just like we just had. And now we're kind of rebounding. And then we get these stair stepping down into new lows here. And we had some fib targets down here. Right now we don't have that, but and then we get, once we get here, we get the moonshot back to the 200 and then a whole nother sequence down. Now this was 2022. And if there was a comparable that I would go with right now, is 2022 is probably more comparable. I know market participants, especially retail, tend to be buyers, not sellers. So there is the buy the dip, do air quotes, buy the dip mentality out there. But this pattern that we're looking at here, let me see if this will work. Yeah, it does. Good. So that, this would be where I was talking about where there's probably another leg. And if we look, 22 just kind of kept going right into this pattern here, and finally bottomed out after it took out that secondary low. So right now, if I come back over here, we are right, we're probably like here. So we had the initial sell-off, we went through the 200, now we're rallying back. Everybody thinks we're going back up to new highs. We don't. We get another leg down, and the only thing that's going to convince me to get off this scenario, and I've been painting this out there for a couple of weeks, so we get this bounce. I mean, I'm seeing FOMO, people losing their minds on the internet, Twitter, about different things, and that's like a pretty good sign. I love my YouTube channel, because please comment, especially on I try to answer a lot of this stuff when I have time, and usually I have a reasonable amount of time to answer some of your questions on there. But this pattern, look, we could get out, make a new low here, and then get another moonshot if we did this pattern. But I think that we will probably not get back to the 200, but this is going to be the key. I want you to see this orange line. This is the 200-day moving average, okay? So I set that up. We're going to go backward. I believe we're looking at the NASDAQ here, so that's fine. Hang on. So let's get back to the current market. This is the thing I was just showing you that slope of the 200, and that's important to understand. This bottom indicator, way down here at the bottom, right here, this is the angle of attack of the 200-day moving average. And let me just see what the values are. So it is right now negative, okay? So let's go back up top here and let's zoom in. So what we're likely to see, if this 200-day starts to roll over and down, then the primary big trend is going to be down. And that's going to keep the markets well under control for a while, right? So this is that fact that we're doing that. We are seeing that the PPM is trying to increase and it wants to get back positive, but this is what we have to watch. If the 200 gets any kind of real downward momentum, then that's going to be, right now, testing the 200, it's negative. That tells us that we're likely to reject off of that level. And whether it be a big reject, I don't know. But the bottom line is it should reject around that number if we continue to climb in this pattern. And everything I've been talking about since we've been doing the index review is we have narrowing volatility. The market grid is collapsing in. Typically, when it gets very narrow, then that's a prelude to a downtrend. Doesn't have to make new lows, just that we're going to see a reaction down. And then we have a negative 200. It's rolling over. There's a lot of things. If we do make another leg down, and I'm right, or we retest the lows, that will be enough to pull that 200 over. And once that gets over, then you've got a ceiling on the market until enough work can be done sideways to cause that to change. And you think about it, the 200 moves very, very slow, right? So 200 is equal to like the 40, this is daily 40 week, and it would be a 10-month moving average would be an equal on the monthly graph. And I'll go through that stuff on Sunday night. So mark your calendars for 8 o'clock on Sunday, and I'll be going through that. But this is a scenario and what's driving me. So this is the macro view. I'll do the micro view and the Substack tonight. So if you don't have Substack, it's $8 a month. And matter of fact, if you get it today, you can get the $80 deal. It's going away after the close tonight. But it's $8 a month, and there's a 7-day trial, so you can try it out. And I usually do 1 to 2 freebies every week. But anyway, so it's kendallreport.substack.com. Anyway, this pattern I'm talking about here is significant enough that it can drive multi-months or even a year of market action. And this is my concern right now, is I'm seeing the potential for that. Right now, the algorithms are suggesting that we're going to see a peak bottom here from a momentum standpoint, but these things change. And one of my favorite things to do. Hopefully, we'll do a live stream sometime soon that has intraday markets on there, and I'll show you the favorite thing to do if you have the pro version of TradingView is to put a 5-second chart on, set it up just like this with ppm 1, 2, 3, and the 200, and then put a 5-second chart on there and just let it jerk around. What you'll see is how the algos are constantly adjusting. It gives you an idea. So right now, this is a daily, so it's in slow motion. If we go to weekly, it's in higher level of slow motion, and monthly is like super slow. So the activity that you see in these charts here is daily, the daily noise, and we're seeing that we're going to see some peaks and come back into values, and that at that point we'll be able to figure out how much downside pressure there's going to be in the markets. All right. Let's go to the treasuries real quick. And one of the things that I've been discussing with you on the treasuries is that we're going to come back into around 415 or so. I've been talking about that for several days. We hit 416, and we closed at 417. We're probably going to bottom out here. That 200-day moving average is coming through here. And you can see this is actually, I call this the spaghetti bowl. When you start to see moving averages and even in the forecast overlap each other kind of randomly, that's typically a point where there's a transition point's going to happen around that. So right now they're all focusing down to about 407 is that, and I've been advertising 405, 440, 430 is probably the more primary range for the 10-year. And if it breaks below 4%, then 395 is an extreme. So if you own the bonds and you're trading bonds, you want to be a seller of the bonds if they rally to that point. So let me just bring up the 10-year notes here. This is good. I'm glad I did this. So we've got some Fibonacci targets here to retest those lows. This would be inverse now. The prices go up when yields go down. And we're looking at 113 target, 114, and then a 115 target. If we look at the PPMs, they're kind of contradicting here. So that tells us that the probabilities are a little bit lower on that. Tell you what I'm going to do. I'm going to grab this data and I've got another monitor here, and I want to run this sheet and just see if there's anything interesting on the data sheet. Okay, so let's move on and since we did get a buy on this on the energy sector, I want to take a look and see if there's anything showing up on crude. It's interesting that the stocks, I don't have a way to bring it up right now, but the stocks are somewhat inverse sometimes to the direction of crude oil. You would not think it's like that, but it's been something that's been going on for a while. So we're looking at crude oil, still got Fibonacci targets around 58 bucks here on the downside. That's one of the things, the Trump book tour goes on, and now they're celebrating the 100 days and everything's, you know, everything's a celebration. You know, I kind of hate how politics and how the governments are run right now. It's kind of frustrating. I don't want to see these guys for the most part, right? And they're just kind of in your face right now with everything that's going on. Anyway, but yeah, so crude looks fairly good. Let's go to, looks like it's trying to bottom here. Let's move over to a weekly real quick. The red dot indicator is there. I'm going to show you this. I've been doing it off and on, but I get emails from you folks. And by the way, if you've had trouble reaching me, we had some DNS problems off and on for the last several months. I think today I spent an hour and a half working with the IT department trying to get this hammered out. So you should be able to contact us fairly easily right now. Finally, like you should be able to. It's been very intermittent. It's been very frustrating. But this WTR forecast, you can choose any of the indicators in the suite. I've been getting emails on this lately. And to do this red dot forecast that I always show, all you have to do is change the period of SMA to 1. And then I make it red. And then the thickness of the projected dots, I usually do 4. You can, if you want to see them a little fatter, you can go there. But 4 seems to be a nice clean number. Model coefficient stays the same, 150. Future bars, I'm doing out 11. You can do as many as you want here. You'll see the dots on the page above. When I stop clicking, you'll see that all of a sudden red dots are going out. So they're not very likely to be accurate going that many days out, but a few days out and is really helpful, I think, to get an idea of what if we're going to trade in the range. And even going out here on this crude is just showing us that we're going to be, it's forecasting a range bound type situation. And it makes sense because you get all the moving averages flat, nothing, no real excitement. But once again, if you have the indicators, then that's the way to do that. I got 2 emails on that today. So hopefully you're watching. And I also responded to you with some graphics and how to do the settings. But the bottom line is this forecast is pretty much what we're looking at here. Gold has been, in my opinion, trying to top out on, this is a weekly. We had a bit of a climactic move last week, and now we're seeing momentum over the next several, we'll just go 2 to 3 months. Looks like it's going to start to come back in. We're going to challenge the 10-week moving average. Maybe there'll be something bigger. The red dots, I've got it moved out here. Let me just go full screen. I've shown you this chart before, but I guess we could do something interesting. I think that other one's set on 50. So this is looking 50 days out using this algo. This is how it's saying, and that's kind of what I'm seeing here too. The angle of attack on the 10, 21, and 40 are vertical right now. So you would expect them to adhere to those moving average or trend lines. That should, and that's what's being projected out. But all this stuff is using the same math. Okay, so the WTRs are using the same type of math, so it should match up. If it didn't, there would be a problem. But sometimes what we'll get is that the red dot will start to focus a turnaround in the markets, and really all of these tools, folks, are just there to give you some insight on what to expect, and then you want to watch price movement, different types of techniques. The hard part, and I've told you folks this all along, is the hard part of being a discretionary trader is making decisions around these kind of indicators. And I'll bring up whether you're using MACD, RSI, I don't care what the indicator is. There's just always challenges around all of these. And when I was building, and this goes back to 1983, 84, when we were looking at some kind of indicator, well, all we want to know is, what was the angle of attack of the moving average, and and we worked on a probability map there. So now we got the probability map kind of programmed in. I showed you the probability chart last night, but gold looks pretty solid. This is a weekly forecast. So if I come over here, you'll see a little bit different on the daily. So when we go to daily, now you see momentum really starting to pair off pretty quickly. And you'll see that the algos are now projecting more of a sideways move, kind of a range bound, I would say, from the 3260 level, maybe a touch lower, up to this upper end here where these fib targets are, which are, I think, the upper target 3404. So you could still print a new high down the road here, but this is what's being forecast. We'll find out what the realities of these things are. So let me get through Bitcoin, and then I see some questions coming up. I'll do some Q&A before we finish today. So we'll leave this chart up. Here's Bitcoin, still forecasting. I think it's going to be interesting, and I mentioned this in last night's Substack, is that if we break over 100, it's possible the market sentiment could change so much. The crypto community is big, and it's very emotional, so you get a lot of the volatility. And if you break over 100, this will be the telltale, right? Is if you break over 100 and it doesn't run, like it doesn't head right for this high over here, which is, let me just bring up that value. The high was 109,356 on this exchange. It's BitSnap. But if you get if we get a breakout above 100, then everybody's going to be thinking 109 plus. And I don't think, but let's look here. Yeah, there's some old fib targets that failed, but those upward targets are 119 and 124. The minimum here is 111. So 119.4 and 124.2 are rounded off. So that would be, even though these targets aren't going, that would be probably a range. I suspect from, if we were getting that kind of setup, we'd get some new fib targets to flow in just off of these patterns here. One of the things that we're seeing here, and I'll go back and bring the indicators up, is that the indicators are all suggesting we're going to roll over. So we're probably going to come back into the 200, and where the 200 and the 21, this is daily chart, 221 day is starting to roll over. So we'll see how this plays out. But this is still going to be stable. There's still upward bias right now. All those things are happening. Yeah, I'm looking at that. Let me publish this. I did run that data sheet. So let's just bring up a new browser here. Nice. Let me try it again. There we go. So this is the 10-year. So this is looking at the targets for this. So we're looking at, right now it shows that we have neutral to bullish, so that means a little bit lower rates. This is the ZN contract, 10-year futures. And then we look at, it's interesting because we're in neutral patterns on the PPMs. If you're looking at this this sheet here, I'll bring that a little bigger so you can see ppm 1, 2, 3, and 4. These N's, you can see N is a neutral pattern, so it doesn't really have any super positive trends or anything there. Right now it's giving us the 112.09, and then 112 even is the projected high lows. And this really pretty neutral. I thought there might be something a little more substance than that, but not the case. All right, let me look at some comments here. We got we got 15 to go, so we can we'll take a quick look here. Yeah, I can do that, Chi-Town Tony. You asked that last night. So consider ER and decision execute. If it's not greater than 100, it's Substack. You want 200 to 250 on the ER ratio on WaveTech. If you can get it, 100's minimal. So it has a lot to do with it, and that's why you'll see some of those signals will work. So if you have it backed up, you have the indicators, which I believe you do, you can kind of come in and try to validate, look at the algos. But I would be highly suspect of that. If you can, in the comments, just put the number that you're looking at that might be of interest to you. Green Garden, what is this? We're coming into Wednesday. I will let you know, like last week, is a possibility we'll do another Friday. Hopefully I think what I said is, and I just remembered myself here, is that one of the things that I figured out, we've had so many issues, is that I just need to produce the video. So I think if I got the stuff we did last week cleaned up, which I still have intentions to do, I literally, just so you know, my day is I went to bed at 3 a.m. I was back up at 9, and I've been working all day. I've been nonstop on stuff. So it's been kind of, there's a bunch of stuff I'm trying to get together and get cleaned up. Sort of like spring cleaning around here, and just trying to get the emails, and with DNS errors have been a couple of things going as there well. So I'll let you know. I may try to do another live, but I feel like I would be much better serving everybody if they were, if I was a little more focused and not dealing with issues, and like we had last week. That was kind of interesting. I had a mouse die, the battery go dead. It was just about everything go wrong. Okay, so just looking through some comments, see if there's anything else. Yeah, we got a Elliott guy hanging around. Just looking through some of the comments, folks, so bear with me. Yeah, that's actually a really good question, Jock. Could you go over entries and what to look for intraday? I know that she watches, but I had an interesting interaction with a client on Saturday. We did a Zoom meeting together, and one of the things that came out is getting some really kind of set of rules that you guys can use for the PPMs. That's been needed really badly, and started working on kind of a manual step-by-step and to lay that out. So give me a few days. I actually got a lot done in like less than an hour last night on updating some other work. So that's really what's needed, is like, what does the setup look like? And one of the other things is having wave tech and looking at, okay, it only does stocks and cash indexes, right? But you could look at where that buy signal came in that really looks well located, then bring the indicators up. And I always use, you folks, people ask me which indicators you use. I show you every night. The PPMs, 1, 2, 3, and the 200. I use all the WTRs, 10, 21, 40, and 200. And then I always have the market grid, and I have the fib targets there. Pretty much my core of what I look at. Once in a while, and when I'm day trading, a lot of times I'll use the webs. But the webs are a great tool that I need to dive in. And one of the things I've been telling some folks I've been talking to is pretty much all of the training videos need to be updated. So let me come off here for a second. And see if I can get. Hang on. I've got. I'm going to show you folks something here in just a sec. There's been a situation going on here. Folks have been having trouble finding some stuff, so you can actually see the training videos. I just made them public. So if I come up here to my channel, if you come up here to playlist, you'll see this very first playlist right here. And this will actually, it's kind of a master class, and it goes through. You'll see the playlist over here on the right-hand side. So that's a place, if you've been looking for this stuff, we had, like I said, we had a bunch of DNS stuff break, and some of our modules broke. So I'm trying to put Humpty Dumpty back together. But this is the place where you'll find that. So you go to the Kendall Report channel, and then what you can do is go to playlist up here in this little menu at the top. And then the very first one is indicator review and how to use. So that's a pretty good place. And there's some other videos in there that might be worthwhile as well. All right. So been meaning to show you folks that for a little bit. Just a second here, I'm just looking at that's interesting comment, clickety clack. Could you tell me exactly? Yeah, I know, Ronald. That's true, right? Humpty Dumpty could not be put together again. That is how it feels right now. Let's go. Clickety clack. Could you do me a favor? Now that I've fixed things that we'll actually test, but send me an email at Kendall Report, info@kendallreport.com. And tell me which video that's happening, because I will try to fix that. I'm not sure why that's happening. That would be quite frustrating, to say the least. So just so you guys know, I had somebody working for me a long time. A lot of things have been messed up. I'm just trying to put Humpty Dumpty. Matter of fact, I'm going to make a new Humpty Dumpty. He's all going to be better. I've got just hired a team to work on a number of things on the back end that are broken. So I'll get all that together. and all that. So let's see, where are we? 5 minutes to go. Just a quick update. Still working on the book. It's coming along. I did manage to get one more chapter done. It's flowing together. That's a good thing. I'm also, I keep telling you, I'm very close, but I just need, like, I did not have, I've literally worked about 15 hours. I'm going to take a break and I'm going to go back to work from 10 p.m. till 3 a.m. my time again tonight. I've got this AI project going that is coming along. The data sheets that you folks see all the time, I show you all the time, that the ones that right here that are in this, I'm one step away from getting a point where we can pull data in to this without having to cut and paste. That's going to make it a lot easier to use. And I've got another project that goes along with WaveTech that is going to not only modernize, bring in some new types of metrics, and this is the sheet for that. And there's like multiple tabs and volatility calculations, some really cool stuff. So those of you that are using WaveTech, you're going to come into a new world soon. This I've actually got this one, so it will actually pull in. There's a data window and there's some data you can pull up. It does a bunch of. This is actually 2 versions ago. I just happen to have it on the screen, so that's coming out. There's this is one of the cooler things I think I've done. I've been working on a lot of probability, forward expectations, those type of things. So when we're actually looking at projecting off rolling returns, probabilities and expectations of where your portfolio will be as long as you follow all the buys and sells that we issue. And this is, I think I've already shown it to a couple of institutional guys. They're like super thrilled for me to get this done. And then there's also some other types of volatility analysis and stuff that's going on. And so it's going to be pretty cool. There's like 3 more things I'm going to add to this report, and you'll actually even be able to put the value of your account in there and model it walking forward very soon. So this is going to be a whole new module, and so I'm excited. I'm working with some VC types to bring in some money to do a big project. So I'm really excited about that as well. So anyway, so that's what I've got going. You guys aren't throwing a lot of questions, or I'm not seeing them here. Actually, I find that Claude recognizes charts really, really well. Yeah, I mean, so for instance, we'll have an AI talk for a minute. Matter of fact, and I told you that's one of the things I'm going to be starting to put out videos on how I'm using AI. Yesterday I had 5 browsers. It was 4. Earlier I had 5 browsers running different tasks, acting as agents that compile. And I put a document together, so I'm doing a lot of this stuff in modules, because when you get into big projects with Claude or any of these, I don't care, Replit, Cursor.io, you name it. When you start getting in big projects, they just break. And then once they break, the agent starts hallucinating. He can't ever see. He'll lose the entire touch of the project. And I've been down the trail with Replit on a couple of big projects, just only to be destroyed emotionally because of that. But I'm going to do some videos on this stuff. I'm pretty, for the most part, pretty good with the technology and stuff. I've grown up, from literally 1979. I had a computer on my desk in 1979. It was an Apple II with VisiCalc, but I had it. But I've been immersed in technology and building software for my whole life on top of trading and trying to automate process and get rid of emotion. So that's a lot of what I'm about. Many of you know that. Some of you may not if you're new. We've been picking up quite a few people, subscribers lately, so I appreciate it. Yeah, I think here's what I'll just say, Pamela, real quick on that, is it's your prompt engineering. I have one prompt that has 3,000 words in it. Okay? So the more you tell it, the more you set the expectations. And when you're, I'll just say this will be a quick comment, is tell Claude who you want it to be. You know, I want you to be a senior engineer working with a team, and you can define your other folks. Like I want engineer. I need, you know, these different agents, and I need all of you to work together. And that changes. It's really the prompting and how good you are at prompting. And I have for many years, folks, I've had people work with me, and just on Google, I've always been able to hack Google to get it to give the more focused results than what it will tell you. Than what a normal, if you talk to it in English, sometimes you have to talk to it like you're Yoda. That'll even help when you invert the verb or whatever. But I've always been a really good hacker, and the prompt construction that you use on AI is everything. Don't ask the right question, you're not going to get the right answer. So I've actually been through so many frustrated trails that I've got it, and I always get frustrated when I'll go, you know what? I told it half of the prompt. I didn't tell it all of the prompt, and it did exactly what it always does. So but the prompting and the engineering of those prompts are so much. Anybody that's doing anything, and then using APIs will help as well, because then you're not getting into the randomness of the prompt. Okay, all right, enough done. I'm going to make some videos on this. If you catch the end of this, you'll have, those are some pretty good tips. Yeah, so Chi-Town Tony, all of that happens in Portfolio Expert. It actually does all that, but that's a good thing. And listen, when I start to get into, I have a file called WaveTech Rebuild. When I get to that, I'm going to reach out to all you users and people. We've got institutional guys been around a long time, a bunch of retail folks now that have been around for 4 or 5 years. So we'll definitely get in touch with you, and you'll be part of the development team, because this is a comment from internal. We're talking software here at the end of this show, but the bottom line is I've always said that the best ideas that we will ever get, mean we, the company building the software, will be from the folks that are using it and applying it, and that's why what you're saying is like super important. And a lot of things over the last 20 some years have changed because of that input that we've gotten from the user base. Anyway, folks, I'm babbling. We're not talking markets anymore. So if you caught the end of this, you're like, what the heck is this guy talking about? Spin back and go through the markets there. Anyway, don't forget to like and subscribe, and we will, I'm anxious to do some of these AI videos, because I have learn a ton. I had ChatGPT when it was free in December of 22 is when I first signed up. I think it had been around for a few weeks, and I've been crazy immersed. I don't even use chat anymore. Once in a while, I use it. But so I'm pretty much, Claude is doing a lot of the work, and if you learn how to do modules, then you'll be much better. I'm in a loop. Thank you so much for showing up tonight and hanging out with me. And we'll see you tomorrow night, same time. Good luck trading tomorrow.